Hey everybody, it is Wednesday the 27th, and the market is slightly lower here, holding on to the week to date anchor, and more important, above that rising 5 day moving average in these higher lows. So it remains innocent until proven guilty. We've been extended for a while, but that hasn't prevented the market from continuing to move higher. The NASDAQ, same story, fighting right with that 2 day anchor, and the more important levels are the 5 day moving average in this higher low from last week. So things are remaining cautiously bullish, and caution is always there. It's the market. 47.19 is our stop in the balance of SMAR. LQDA, we have two stops in there. Those will remain unchanged at 1141 and $10.92. Mobileye, we're going to raise our stops here from 42.56 to 43.10 and 42.74. So two stops, 43.10, 42.74. Builder, we were able to sell a third at 169.50. That was the plan. And the stop on the balance will go from 165.78 up to 166.95. That's now $2.05 higher than where we had originally placed our stop. So most of the risk is actually out of this one for now if we get stopped out there. Boston Scientific, we're going to keep the same. Stop in there is 55.55. If you wanted to, you could probably raise it up underneath today's low, but I'd rather see it make a higher high first. Otherwise, we're looking to sell a third at 56.5 or greater. Car will remain the same. The stop in there is $56.70, and we're looking to sell a third at 57.90 or greater. Crisp. On this one, we took a third off with a gain of $1.65 right off the open, and that's why we don't look that gift horse in the mouth when we get it. Stop on the balance. Looks like it might actually happen, but we're going to put it at 64 even. If we get stopped out at 64 even, overall, it'll be about a 3-cent per share loss. If you feel like it's inevitable we'll get stopped out, maybe you just salvage what's there and get rid of it. I'm not suggesting that. I'd prefer that you give the benefit of the doubt to the stop, but sometimes it's might make sense to take that action. ESTC, we're looking for a pullback and go. Instead, we got a large gap higher, and let's just put the anchor on here so we can see even two things. One, it gapped up, hit daily R2, so that would have invalidated it, and it's stuck below the volume weighted average price, so there's no point in even discussing this one any further today. ESTC is off the list. FOUR, if you're in long here at 74.40, let's take a look at the shorter term time frame in here. So as it got back above the 1 and 2 day volume weighted average price, that was yesterday, so around that 74.40 level, then look to take a third off, probably up near that 75 level, just because the market's feeling a little bit soft, and stop in there $73.49. That's below today's low, of course. The Fastly, we were looking for a pullback and go. Instead, this one gapped up and failed, so no reason to be involved in that one. Remove it from your watch list. If it goes without us. Same is true with MDB. This one gapped up. We were looking for a pullback first. Even if it gets above the daily volume weighted average price, we're not interested. It came too close to daily R2. Take that one off of your list. Let's see. Path. This one, where'd Path go? There we go. That one gapped up and failed, so no reason to be involved in that one. Don't chase those gaps. Wait for them to settle down and get back above the volume-weighted average price. You can see on the short-term time frame, too, that it just wasn't, gapped up and just has continued lower since. So remove that one from your watch list for today. Perhaps we revisit it. If you're involved in Tesla, I would say put your stop under here at 256.10 would be your stop in there. And as far as taking a third off, the problem is here. That's why I said if you're long, it gapped up. So realistically, maybe you're involved, but I'm just going to say I'm going to discontinue updating it because of that gap. We don't chase those gaps. We wait for them to settle down. And now that's gone beyond daily R2, there's no advantage to be getting involved in it. ADT, this one, if you're involved here, then I would say, put your stop really tight. I'd say put your stop, as we said yesterday, right around the 668-ish level or so on ADT. And Amgen, this one, if you got involved in here, we were looking for a little bit of a pullback. It didn't really do that. So again, these were just kind of like, I mean, it did pull back a little, but these are just kind of bonus ideas. I'm not going to continue to update it, but I will say that if you're in it, put your stop underneath this level here. Let's just call it 284.50 for a round number. Big C, if you got involved at 997, let's say, then let's look to the 15-minute time frame. If you got involved at 997, I would say put your stop under here, and this is what I'm looking for is 972 on that one. And as far as taking a third off, daily R2 is up at 1010, so up near that level if you're involved. Fresh, FRSH, this one, no reason to be involved in that one. Take that one off the watch list. GTLB, no reason to be involved in that. IoT gapped up and then pulled back and failed. These were all just ideas to basically tertiary ideas. This one gapped up and, ran immediately and then failed. If you're in it, I would say it's basically from a failed move often comes a fast move. I wouldn't want to hang around. REKR looks okay if you're going to be if you are in it or looking to get involved. I'd say a stop goes underneath today's low. I'm just not excited about these ones. Sophie gapped up, so these were all C-list ideas, and there's really not a lot of reason to be involved in them.